Hey, everybody, I'm Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. This week, we're going to talk about some earnings headlines that happened here recently. We're going to then get into this week's notables, stocks that we think are going to possibly break out, stocks that we think are going to consolidate. And then we're going to talk about last week's trade that we gave out. How did it do? And then we'll get into today's trade. So let's get right into it. So talking about last week's trade, let's begin with Apple. Lots going on. I'm not going to ignore the fact that today is a big mover in the markets overall. Markets are trading down, still under almost 3% for the broader market. S&P 500, NASDAQ down over 3%. We're not ignoring that fact, but we also are going to focus on earnings and how this market is affecting some of these stocks that are coming up. So beginning with earnings, it was a modest beat for Apple. If we take a look at the chart, we'll see that Apple actually through earnings occurred on Thursday, and going into Friday, the stock really didn't move. Okay. So this is the past 2 days. What you're looking at here, this big green bar is today's move. Okay. It is down 4%, but as you can see, this is well off the 10% gap down on the open. And now we've rallied back up. So even though we had the modest earnings beat, the big news behind Apple is that Warren Buffett sold 50% of his shares last week. And now combined with today's overall market move, the fact that Warren Buffett announced they're lightening their load on Apple, the stock is down. Now, look, as you can see, we bounced right off of that $200 support. We'll see if that is significant because the outlook is pretty good for Apple. And we could see, the stock rally from here. So we'll see if the buyers come in, but this is a very dangerous market. I would be very careful if you were going to step in here. But again, as long as you have good money management and hedging strategies, probably not a bad idea to hop in here. Let's get to our next headline, and that would be on Chevron. Chevron came in with an earnings miss, which is interesting. And the big announcement that came from Chevron was that they were finally moving out of California. Most of their operations are in Texas and then elsewhere in the world, but their major operation is in Texas. And they finally said, "Hey, we're going to finally the environment here in California is just not right for our business, so we are going to move to an energy-friendly state, and that would be Texas." So they're moving their headquarters to Houston. If we look at the stock, the stock really didn't move much through earnings, but then on Thursday we had a pretty significant move down. That was on the miss, okay, and then on Friday a little gap down, and then today even further. So part of that is a follow-through from the earnings event, okay, the big move down, and then the gap down on Friday. Well, finally today we have the support here at 145. Now, if we move the chart, get more data in here, you'll see that this area at 145 is pretty major support. And again, if you are looking for an entry spot, this is not a bad place to do it. I think it would be low risk at this point. And as long as you had good money management and you maybe set a mental stop down below price, this might be a good spot to go long, maybe buy some calls, sell some puts if you want to do that. Higher probability type trade, but I would do a spread. Don't sell naked puts. Okay, do a spread. And then same with calls. If you want to go out of the money, I would think a 150 or 155 call out in time, probably not a bad idea. We could definitely see the stock sitting at some support and then rallying from here. And so again, another stock that has a good potential. Now, again, we could move lower, and that's why you want to be very careful here. Finally, our third headline here is on Exxon Mobil. Earnings, we had an earnings beat here, partly because of their Pioneer Resources purchase and investment in Pioneer Resources that they had. Their production numbers were up, and the Pioneer deal contributed about $500 million to their bottom line. So this was good for Exxon. And if we look at the chart here, this is probably the best chart of the bunch. I mean, the stock is making some. It was trading lower today, but now it's only down 1% today, and is looking pretty good. In fact, if we drew a simple trend line here, we're well above it now. If I put some moving averages on here, we're probably, look at that. So my short-term moving average, which is this red line that turns a little lighter color when I move off of it, that's my 21 period moving average. That's my short-term moving average. And look where price is. It's holding right at the 21 period moving average. Folks, that is very bullish for Exxon Mobil. And again, this is a slower mover, but I think maybe buying some out of the money calls wouldn't be a bad idea here. Just give yourself plenty of time. I would do probably a call spread. You could do a put spread for higher probability. If you know how to do some more complicated trades, might think of an out of money calendar spread or an out of money butterfly on those. So, but I think it's still looking pretty darn good. Now, the market overall is holding up well, considering how ugly it looked earlier. A lot of these names, as I mentioned, are off their lows, even though the broader markets are still hovering down around where they opened. And we'll see what happens when the bond market closes here in just a little bit. So with that, let's get to today's outlook. We have a lot more earnings coming up this week. We have over 1,000 companies that are declaring. We are zeroed in at a little over 100 companies for our subscribers, for our two publications that we do surrounding earnings. One is we're focused on stocks that are breakout candidates, and you'll see those are on the left-hand side of the sheet. We believe, those are stocks that we think are going to move greater than 10% through their earnings. Okay, greater than 10%. And then on the right-hand side of the sheet, these are stocks that we think are going to move less than 10%. They're probably going to be pretty quiet going through earnings, and I'll tell you why. So let's get to a few of these headlines. Let me start with Shopify. Here we will. You can see that Shopify was consolidating here as we go into earnings. Now, all these stocks have earnings a little later this week. Shopify has earnings on Wednesday morning. Okay. I would have preferred to see Shopify consolidate here, continue to consolidate, but it gapped down on Friday and today, as you can see, well off of its lows. Okay. But has rallied up. It's still lower by 3% today. But again, an earnings event, it could move another 7 to 10% around its earnings. Originally, we were thinking greater than 10%, but when a stock moves like this, goes from consolidation and starts to move ahead of its event, that sometimes can take away from the ultimate move through earnings, if that makes sense. Now, I will show you the last earnings is back here, and you'll notice that the stock moved higher right into earnings, and then this gap down, that is the earnings event. Okay, so it's not unprecedented where we get a little bit of a move right before earnings, and then a possible big gap down or gap higher. All right. And so next will be Lyft. Let's look at Lyft here. Same kind of thing here. Now Lyft has earnings coming up later this week, specifically on Wednesday morning. Also, same story here. You can see just this stock was just trickling down, and if it had stayed in this pattern of just slightly trickling down, this would have been a great breakout candidate. It has bounced off of $10. This could definitely move upwards of a couple of double digits. Well, like 12%, 13%. That has been a typical move for this stock. but we could see definitely some movement from that. And then finally, let's look at Expedia. This has always been a mover. You can see the last earnings event back here in May. If I pull in more data here, you can see this stock really typically moves around earnings. I can remove this from my sheet so you can see it better. So you can see that gap down back in February, this gap up back in November. What concerns me is I would love to have seen this consolidation here that happened last week continue as we go into earnings. Hopefully, this is not the move that we're going to see through the earnings event. I don't think so. I think they're really looking at the consumer, and is the consumer still, planning vacations? Are they still using the service moving forward? All right. So those are some of our breakout candidates. Now, let's jump over and look at some of our consolidation candidates. This would be a different type of list. We're going to start with Walt Disney. All right, here. So Disney is right on the cusp. We expect this has an expected move right now of around 9%. So it does fall below that 10% threshold. So this is one of those that could, depending on how the option market makers price the options, if they price the options expensive enough, then we would do a trade like we did with Amazon last week, which we will touch on in just a moment. All right. Otherwise, I would be very careful of doing that, especially around Walt Disney. But as you can see, this stock has been in a big sell-off here. It cracked the $100 level, back down around 89. I think earnings are going to be a big mover for it. As you can see back here in May, the stock, look at that tail, just like on one of the previous stocks that we looked at, and then drop. Okay. So this stock, may move, but not like some of the big breakout candidates that we were just talking about. All right. So another consolidation candidate would be Hilton. Okay. Now, Hilton is this is a more mature company, and we just don't see this stock moving. In fact, the estimated move for Hilton is around 3 to 5%. I would not think that this is going to be a big mover. As you can see, it's had a nice move. It's down 1%, but through the actual earnings event, and this is one of the strategies like on Amazon that we did last week, where we don't think that, because of its historical record and how mature the company is, that our subscribers in our delta neutral income portfolio, we will probably sell premium right before the earnings event, looking for that move of only 3 to 5%. And we can then capture that premium and profit in a very short period of time. And finally, let's take a look at Occidental Petroleum. Now, Occidental is obviously in the energy sector. This week is a heavy sector in 3 categories: the energy sector, the consumer, and in health and biotech. Okay, though there's a lot of companies. So I wanted to get Oxy in here because through the actual earnings event, it's only going to probably move 2 to 3%. Okay, you can see here that it's had a couple of consecutive days down. It's down 2% this day. But if we can capture some expensive IB and our break evens are 6 or 7% away from the money, then a 2 to 3% would definitely be profitable in a trade for our delta neutral income subscribers. Okay. Now, the stocks that we looked at a few moments ago, those are breakouts. We have a service for that called Delta Neutral Breakout, and that's where those go. Okay. So with that is our outlook for this week on both stocks that we think are going to break out, stocks that we think are going to consolidate, and we'll take a look at some of these next week and see how they did. In fact, speaking of how we did, let's take a look at Amazon last week. We did anticipate a very quiet earnings for Amazon, that the stock may move, just 2 to 3%. So let's pull up, as you can see, the risk graph here. All right. And the stock was actually quiet. You can see the red bar there on the earnings event. The stock really didn't move. That means option prices through implied volatility collapsed. And just in 4 days, even though the stock moved on Friday, okay, the stock gapped down around 8% on Friday. Our break evens were almost 11% out of the money, okay, meaning wide. That's where we we had our sell legs of the trade. So even though the stock the following day gapped down 8%, we were able to take our maximum profit of $138 per spread, which was a 38% return on risk. 38% return on risk in just 4 days. Okay. Now, when we do these very consistently, and we do a lot of these on a regular basis, it really adds up. Okay. So this is what it looks like to do one of the quiet stocks, where even though we might get a bigger move, we still account for that, and it can be a very profitable trade. So what are we looking at this week? Well, because of its historical volatility, okay, and how it performs through earnings, we are looking at Expedia, okay? We are looking at doing what we call a strangle on Expedia. That is simply by buying 2 different strikes, same expiration date, okay, but 2 different strikes. So a call at one strike, put it at a different lower strike, and then same expiration date. And we're looking for this stock, again, to move big through earnings. And this trade would be in our delta neutral breakout service. And in that service, I provide updates, entry levels, updates, commentary, and exits. Okay. But for us, we're going to take a look and see how this trade worked out next week. So everybody, I appreciate you dropping by, watching our show. Please like and subscribe. Come back every week, and we're talking earnings, and we're going to look at the same stocks, those big breakouts and those big consolidators, each and every week right here on Earnings Call. Everyone have a great trading week. We'll talk to you again soon. Take care.